Analysis on what to expect at the Open. Cameron Peacock joins us now from IG Markets in Melbourne. Cameron, good to see you there. Yeah, what's your calls for the Oz Market Open?
Yeah, good morning, Bridie. Look, obviously yesterday we got off to a good start to the week, up 0.8% to close at 42.45. I do think it's going to be a quieter, more subdued day today, but at this stage we do have the market called up about 10 points or 0.2% around that 42.55 level. But it wouldn't surprise me to see the market trade in either direction today, or move slightly into negative territory at some stage. I think overnight we did see European indices continuing their strength of late. Most of the major indices up between 1.2 and 1.3%, but we did have the US investors a little bit more conservative. Markets there finishing essentially flat. We had the Dow Jones down just 2 points. We had the S&P down 0.6 of a point. The Nasdaq down 0.4 of a percent. I think there's a real sense that investors are really just maybe in a bit of a holding pattern now after the strong gains last week, really wanting to wait and see what does come out of these key central bank meetings later on in the week. Obviously last week we had Mario Draghi coming out saying that he and the ECB would do whatever was necessary, to protect and preserve the euro. That sparked a bit of a rally, of course, on or last week. But I think expectations are certainly running high heading into this meeting. It's interesting. Overnight, we did have some reports saying that his comments did catch some ECB members off guard, and there is a bit of discord now amongst the bank's governing committee, because there's certainly some ECB members that are still opposed to the ECB recommencing their bond purchase program. So, the expectations have been raised, and I guess the scope for disappointment is now greater, given what Draghi said last week. So I think, investors are really a little bit cautious about what might unfold in the back end of this week, and hence we did see the euro coming off a little bit last night from that sort of 122.95 level back into the 122.60s. But, focusing on our session today, I think it is going to be a fairly benign, subdued session. Investors really waiting to take their cues from what we do hear from the Fed on Wednesday and the ECB on Thursday.
Cam, just to interrupt you there for a moment, we've just got some news coming through from Caltex. Of course, we know it announced the closure of the Kurnell refinery in Sydney last week, with the expected loss of around 330 jobs. And it did mention in that statement there that it was looking at capital management initiatives. It's just come out with a release to market saying it's going to raise $300 million through a notes issue. So Caltex there just saying there, $300 million capital raising through a notes issue. Just back to the Europe situation, if we could, Cam, and looking at what that's done to the Aussie dollar there. You were talking about the euro, but looking at the Aussie, really this search for yield just goes on, and the Aussie, I mean, how do you think it's going to trade? I mean, if there is disappointment in the ECB decision this week?
Yeah, look, it's interesting. As we always speak about, the Aussie is a bit of a proxy for risk appetite and global sentiment. In the last couple of sessions, particularly from the back end of last week after Draghi's comments, we did see equity markets having a rally. We saw the euro bouncing quite sharply off its 2-year lows, and we did see the Aussie dollar moving convincingly higher. I think last night or at 4 o'clock we were trading in the 104.60s. We actually hit a high overnight of 105.08. We're just back in the 104.90s at the moment. But I think if the ECB do disappoint, we will see some of that heat come out of the euro. We might see it pull back a little bit, and just with risk appetite being what it is and falling away, potentially we could see the Aussie dollar coming under a little bit of pressure. But I think generally it is going to be fairly well supported, and it has been fairly well supported through this, I guess, this tumultuous last couple of months, and that is because of what you mentioned, that yield advantage. You've got government bonds across all of Europe almost in negative territory now. You've got the US 10-year at record lows, and you can still actually earn a decent risk-free return on Aussie denominated assets, and I think that's certainly helping preserve the downside on the Aussie at the moment.
Just looking at the session on Wall Street, what did you think was going on? I mean, we saw that flat finish in the end. Was it just a bit of consolidation after the good rally of the past couple of days, or do you think that there was a bit of scepticism creeping in there about what we'll see from these central bank meetings?
Yeah, look, markets often tend to get ahead of themselves. Obviously, after Draghi's comments last week, we did see a sharp spike high in a couple of 200-point sessions on the Dow Jones, and European markets rallying. I think that report overnight that there was some ECB members a little bit surprised at Draghi's comments, and basically saying he'd maybe built a rod for his own back. by jumping the gun and maybe raising the market's expectations when not all of the ECB were on board, maybe tempered things a little bit last night, and that's why we saw, you know, a fairly flat finish on Wall Street and the euro come off its recent highs. If it was all guns blazing and people were really confident that Draghi was going to be able to deliver on what he'd suggested, then I think the momentum could have continued. But I think a little bit of hesitancy last night, and I think that's what's going to flow through to our market today, and just see investors really just treading water and saying, look, well, rather than buy into positions today, we'll wait a day or two and see what the ECB has to say. We'll hear what the Fed's got to say, and then we'll make our decisions from there.
Really appreciate your analysis, Cam. We'll talk to you later. Thanks.
Thanks, Bridie.